that China will announce within 2 years that their currency is supported by the gold which its citizens own. And I think they'll give out the figure. A global economy that's pretty fragile, it would sink quickly. Equity markets would correct very sharply. Metal prices will fall sharply, and the whole world will be in disarray. And in a war scenario like that, rightly or wrongly, the dollar would rise sharply. So all of the war changes upside down the economic and financial structure.
If China announces within 2 years that their currency is backed by gold owned by its citizens, it could trigger significant global economic consequences. The US dollar, already at the core of a fragile global economy, would face immense pressure. Interestingly, while metal prices could fall in the immediate aftermath due to economic dislocation, the geopolitical instability might drive the US dollar higher. The speaker Simon Hunt, a renowned economist and commodities expert, highlights that if global conflicts remain stable, central banks, including the Federal Reserve, may boost markets by cutting interest rates, though this often signals an approaching recession. The US and UK's opposition to Russia and efforts to contain China stem from their leadership roles in BRICS and the Shanghai Cooperation Organization, SCO. Once underestimated, BRICS is now seen as a serious challenge, especially with the potential launch of a gold-backed currency that could undermine US economic dominance. Simon Hunt exposes gold's rise is driven more by geopolitical tensions than by the Fed cutting rates. It's not just central banks increasing their gold reserves, but also financial institutions, especially outside the G20 countries. Notably, China's public owns around 25,000 tons of gold. In the past 6 months, the Chinese government has actively encouraged citizens to buy gold through platforms linked to their bank accounts. Simon Hunt talks about the development of the new BRICS currency, possibly called the unit, because of push for gold. We will present clips from Simon's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates.
So if there is no such escalation of the conflicts, then markets will be driven higher, rightly or wrongly, by the Fed and other central banks cutting rates. Although one has to add that in nearly every case when rates start to be cut, they're cut because is in recession or is about to fall into recession. So that's how we start. Frankly, the driving force in everything is geopolitics. And you have to ask the question, why is Washington and London so intent on attacking Russia and containing China? It's really because those two countries are the leading members of BRICS and SCO, Shanghai Cooperation Organization. And Washington, having at first dismissed BRICS as being anything of significance, now understands fully that if the BRICS summit is allowed to take place in October, when there will be a number of announcements made that will show how mature BRICS has become and that they are accelerating their development of their own unit currency, which will be based on, as we understand it, 40% gold, 60% member currencies, but those member currencies linked back into gold. That would be a big stab into America and its allies. Gold's rise is much less to do with the Fed cutting rates and much more a reflection of geopolitical tensions. And it's not just central banks that are adding to their gold reserves for this reason, but increasingly financial institutions. And it's the power of gold buying has been outside the OECD countries, well, outside the G20 countries, Middle East, Asia, Russia, China. Don't forget that China's public owns something around 25,000 tons of gold. And Chinese ministries, not just the central bank, but mostly the PLA, own something around another 25,000 tons. And in the last 6 months, the Chinese government has encouraged its citizens to buy gold by providing a platform that allows them from their bank accounts to buy physical gold from the Shanghai Gold Exchange, even on a never basis. So, I mean, my guess, and it's probably tied into the new BRICS currency, which I believe is called the currency unit.
Simon, in a recent interview at Commodity Culture, explained silver is expected to grow faster than gold over the next year, with silver being viewed as a trading account and gold as a wealth account. Recent developments in the silver market have been noteworthy, with prices nearing a 12-year high. As of late September 2024, silver has bounced back significantly, reaching approximately $32 per ounce, driven largely by Chinese stimulus measures and growing investor sentiment. Recent discussions among central banks highlight their critical role in maintaining financial stability amid rising economic uncertainties. Central banks will attempt to prevent systemic failure, leading to runaway inflation, possibly surpassing the levels of the late 1970s and early 80s. U.S. inflation could exceed 13%. Treasury yields might surpass 10%, devastating an already indebted world. Simon Hunt alerts us if war is delayed until after this crisis, 2025 to 2027, the result will be rolling recessions or depression alongside war. However, war may come before the U.S. presidential inauguration in January. Simon Hunt, with experience in analyzing global markets, particularly in copper and metals, emphasizes markets will likely rally as central banks cut interest rates. However, a recession is expected to hit soon after, leading to sharp declines in equity and base metal markets through late 2025. Top commodity traders like Pierre Durand predict copper could rise dramatically to as much as $40,000 per ton over the next few years due to the ongoing electrification of the global economy and insufficient supply growth. Let's get back to the interview.
Silver over a year is likely to grow faster than gold. I would call silver is the trading account, but gold is your wealth account. I think Martin Armstrong is dead right. War comes back to the point I made earlier, that America and her allies are not going to allow BRICS to mature into a real rival to their system. That's the bottom line. And that inevitably means war. Either the war is very soon, as we discussed earlier, or it will happen in a year or two's time. So if it gets postponed for whatever reason, then I think that the global economy is tipping over. By early next year, most countries will be in recession. Then all the central banks and governments will be throwing everything into the pie to stop a systemic failure. So inflation takes off, dollar falls sharply, and inflation takes off to an extent that it will probably exceed what we experienced, or some of us did, in the second half of the 70s and early 80s, 1981 being the peak in inflation. So you'll be seeing US inflation 13% plus, global inflation 15% plus. And what does that do for the bond vigilantes? Central banks don't control the long end of the curve. We will see US 10-year treasuries yielding over 10%. What does that do to a highly indebted world? End of story. So if war is postponed until after that happens, which will be when we 25, 26, end 26, early 27, then you will then have either rolling recessions or depression plus war. But my fear is that war is going to happen before Inauguration Day in America in January. So we will probably see markets getting excited by central banks cutting interest rates, and we will see S&P rising sharply into the early months of next year, with base metal prices like copper rising to potentially over $11,000. But it is then that the real recession will start hitting. And then we will have big falls in equity markets and in base metal markets to the end of 2025. Then more liquidity is driven into the system, and you have the final hurrah, as I'd like to call it, when you have a takeoff in equity markets and takeoff in base metal markets, with copper potentially going to 14,000 and S&P over 7,000, et cetera, et cetera, et cetera. But then we come back to what I've just said, the bond vigilantes. But the alternative scenario, which I mostly fear, which is the war scenario breaking out by the end of this year. That all changes the equation.
How does that change the equation, the war scenario?
Because the world goes into not the depression in 2028, but almost immediately.
The global economic landscape is at a critical juncture, influenced by rising geopolitical tensions, central bank policies, and the growing prominence of gold and silver as strategic assets. The potential introduction of a gold-backed BRICS currency could challenge the dominance of the US dollar, while ongoing conflicts may further destabilize markets. How would the introduction of a BRICS gold-backed currency specifically impact the US dollar's reserve currency status? What are your thoughts on Simon's predictions? Let us know in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.